Hello, Sander. Welcome to the Builders Podcast. It's a pleasure to have you here today. How are you?
I'm very well. How are you? Good to see you.
Good to see you too. It's a pleasure. Do you want to start to give us a little introduction of yourself and of FlatPay as a company?
Yeah, sure. Yeah, so Sander, 36, has worked in sales almost all of my life, selling everything from newspapers to alarms.
Hmm.
And then after having done that for, I don't know, around a decade, I decided to go and start FlatPay as a business together with a couple of the other guys from the alarm industry. So we were running a quite big organization out of Denmark and subsequently also out of Finland that was doing field sales at scale. And I would say quite opportunistically, we thought that we could take that business model into other industries that had high complexity and high lifetime value, and that's part of the reason why we ended up in payments. Also, Verisure, which was the company that we worked for, was owned by an American PE fund that also
Hmm.
happened to own Nets, that then later merged with Nexi, who's the, let's say, the European biggest competitor. So we did actually go and spend some time with the folks over at Nets, and I think we took a mental note that maybe something could be done differently in this industry. And then when we had the time, we finally got going. And yeah, this is 4 years ago. We
Hmm.
launched the company basically 1st of March in 2022.
That's very interesting. First of all, I need to ask about the alarm industry, because it's kind of the first time that I be speaking to someone in payments that is coming from a totally different industry like this one. But apart from that, it's very interesting also the kind of experience going around with different companies. So I know Nexi pretty well. It's probably one of the best payment company in Europe, and one of the diamond that we have in fintech in Europe, in my opinion. And you spend a little bit of time with them and with other payment company before actually launching a FlatPay.
Yeah, so when I say spend time with them, I think it's more. Verisure was doing quite well in Denmark, and Nets
Mm.
is a Danish company as well, and Denmark is a relatively small country. So we knew a couple of the people at Nets, and therefore shared ideas, shared strategies, etc. with them, but also got to understand their business a little bit. And I think there was just many elements where we thought we could maybe do something different, maybe do something better, maybe even do something cheaper. And that ended up being, let's say, the kickoff to the FlatPay story, trying to focus on a specific segment and try, like, instead of trying to serve all ends of the segment, but also, of course, not as obvious at the time when we launched, but then
Mm.
later on becoming obvious that we could provide them with a variety of different products that a giant like Nexi or Worldline, etc., would struggle to do because they're serving all ends of the segment, whereas we're only doing something for SMBs. Yeah.
Now, that's actually a very interesting point. So when you actually launched it, what was the real problem that you were trying to solve? So it was something that you experienced firsthand, and you say, yeah, someone needs to do a better job at it.
Yeah. So I think was like part of it was also just opportunistically. We thought the industry was interesting. We could see that the product were, in our opinion, are too complex to understand if you were a merchant. You know how it works, like with merchant acquiring, there's this quite complex matrix that you have to understand on consumer and corporate cards, and then
Yeah.
domestic, interregional, and international cards. You have then different types of card schemes, etc. And that typically means that an average merchant, they don't understand anything.
Mm.
And the beauty of that, if you're trying to profit maximize, is that you can basically rip people off if you want, because they have absolutely no clue what they're paying.
No idea what they're doing, of
No
course.
idea. So I think 99% of the merchants we visit, they are surprised to hear what they're paying. Some are estimating more, some are estimating less, but net, basically no one understands what they're paying. And that, I think, it's also due to the fact that there's not like an invoice relationship in this industry.
Yeah.
I touch your money, and therefore I take my money before you get your money. And that just, let's say,
And you see just the final step, the merchant just see, what is actually gaining or landing in his bank account, but they have like zero visibility on the whole flow. So it's kind of blind on their side.
yeah, I think you're like, if you are an Nexi, you don't have a lot of incentive to create a lot of clarity around it, right? You already have a very big portfolio. They are the clear market leader in most of the European markets. So I think the incentive to go and create that transparency is obviously not there. So yeah, and then we just thought, I think quite simply put, that you could do something different here. We thought that you could leverage the distribution model that we had worked with for 5, 6 years in Verisure to try and break down that complexity, which is field sales. So going there in person, which like in the AI era sounds completely nuts, obviously, but an average SMB is, well, if you don't understand something, you don't go looking for changing it, right? And
Yeah.
this is low interest stuff, right? And therefore, we've come to learn that a field sales model, if you run it the right way, can produce nice volume. You are not, let's say, waiting around for demand to happen. You can actually go in and create that yourself. Then, of course, the tricky piece is to make sure that you still have stellar unit economics, because
Mhm.
we're hiring a lot of people. I think we're almost 2,000 people in the team by now. Um,
Wow. That's crazy. I mean, first of all, I really love the on-field like kind of search. I think it's one of those kind of things that really make the difference when you are producing or proposing a new solution, you know. And as you said, you know, in the AI era, it seems kind of easy to, you know, validate a solution using AI, but it's not exactly the same thing, I believe. But it's kind of interesting. But I I was to scale it up to 2,000 people. 2,000 people is a huge organization. It comes with a lot of challenges to run something like that.
yeah, so I think like first thing is that like I've been a manager for like almost all of my professional career. I
Mm,
was very fortunate to meet some very smart people in the past that has taught me a lot and given me a lot of opportunities early on. Also, the other guys in the founding team are, let's say, senior operators and have worked
mm,
in corporate life for many years. I think I was probably 30 years old when I was running a 500 people team. So I think that the leadership part of building an organization has not been the most tricky. I think I have a pretty good, let's say, moral compass. I know what I like and I know what I don't like. But obviously, building a 2,000 people organization in 4 years is incredibly stressful, especially because we've done it over 7 different markets. So you are relying a lot on the people that you go and hire. So like I always joke about, I basically have two things to do. I have to raise money to make sure that we can pay salaries. And then I have to make sure that we get in the smartest people possible so that they become responsible for like all the new markets,
yeah.
essentially.
I think we could potentially spend the next hour just talking about those 2 points, to be honest. But let's start. Let's start from the second one that I think is the most interesting. How do you actually make sure that you have the right people in place? Because you have been talking about, you know, people that are smart enough to run those countries. But
Yeah.
at least in my experience, and feel free to correct me here, it's not just being smart. It's like being the right fit for the role. So how do you make sure that you get the right people?
Well, I think first of all, we've been quite, like in this sense, we've been quite lucky. We've
Mm,
not had to let go of a single person reporting to me ever. It's been, let's say, it's been fast, but it's been stable in the management team. It's a relatively big team, so
mm,
I think we're 25 people in what you would call a traditional management team, which is just based on the philosophy that we want a flat structure. I want everybody that sits around that table to know exactly what's going on in the business. We're very informal. We're very direct. We give feedback on the spot. We think that if something matters in Italy, well, France is going to be there in a second
mm,
because they opened after Italy. So feedback that's relevant for Italy is also soon going to be relevant for France. So while it can, of course, be tricky to go and hire the right people, I think we've been fortunate to be quite successful here. Um, I've never done a job post for any of the management team members, right? We've
wow.
always we've always hired from either our own
Network and word
network
of
or
mouth.
yeah,
That's cool.
all the people in that team has been hired based on either myself reaching out proactively to people that I wanted to work with, references or past network. There's not a
Mm.
single person that has come in on a job post.
Wow, that's kind of amazing. It reminds me a little bit of the VC environment. I mean, also for venture capital, it's very hard to find people that applied through a job posting. It's usually a word of mouth word. It's very very similar. So it also seems that people in your team like really like to work for you. Otherwise, they wouldn't suggest to someone else to join.
Yeah, so like this is for the management team, right? So if you
Yeah, of
look
course.
in the 2,000 people organization, there's of course a lot of hiring that comes from job posts,
Yeah.
obviously. But I think we really try to give a lot of ownership um,
Mm,
to the people that we hire. They are typically relatively young. I think average age in the management team is probably 30 something.
hmm
But I think we've found a formula that's
mm,
probably, let's say, contrarian here. So we do actually take people from the, let's say, McKinsey, BCGs and Bains of the world, and then we put them very close to either myself or one of the other co-founders, and then I don't know, spent a lot of time together for, I don't know,
mm.
6 to 12 months, and then we give them commercial responsibilities after that. That has been kind of like the working model so far, and that has worked incredibly well for us. Then typically they start in, I don't know, like a more strategic role. If that goes well, we can then start training them on how we see leadership, how we would build culture, how we look
Mhm.
at commercial disciplines, and then give them, call it a commercial director job in a country, maybe a new opening market, so that the leadership role is not so heavy in the beginning and that they can
Mm,
grow into that role. And if that works well, then typically they get a country opening as a managing director for that country. And I think that strategy has worked well. We've never hired an external managing director for any country
mhm.
when we set up. It has always been someone from, let's say, internal. So every time we open a new market, we expatriate roughly around 10 people.
Mm.
All the disciplines outside of HR is internally. It's typically only the head of HR that we go and hire in the market to
So
start
it's
with.
basically everything else is centralized, and you send a small team to actually conquer a new country.
Yeah, that's how we've been doing it.
That's very interesting. But also about taking executives from places like McKinsey, BCG. It doesn't always work. At least in my experience, you have certain kind of people that actually fit pretty well in the startup environment, and they have that kind of mentality, while other they require more structure and everything. So I think that you find out a pretty good recipe for the good setup, probably.
Yeah, so I think what I like about those profiles is that it's very difficult to get a job there, right? So you know at least intellectually that they are where they should be. And what we then, I think, like we don't test those people. We just spend time with them trying to figure out if they match the culture of the company, if their
Yeah.
like EQ is, let's say, fit for a startup or a scale up. And that's then a little bit easier if you do it also based on references, right? So when you're taking the first person from McKinsey, right, maybe sitting as an engagement manager, and that person is very talented, has a lot of success in FlatPay, it's easier first of all to take that person's references, like from let's say McKinsey, but it's also easier for the person coming from McKinsey to take the leap of faith into a startup because they can
Yeah.
fully understand what happened for that person that they knew pretty well, right? So it feels less risky for both parties. And like for any senior role in the company, I always encourage people to go and reach out to people, use references, use your network. I think in general, there is a selection bias that if you come from a job post, you will, I think theoretically, right? And this is contrarian,
Yeah.
theoretically, you will be less talented.
Mm.
It's tough. It's tough, but that is actually my view.
Yeah, I
That's
know.
not saying that
I
there
mean,
can't
it's
be outliers, right? But generally, if you're coming from a job post, you will be, on average, less talented than if you don't.
Yeah, I do agree with that. If you don't come from a job posting, in my opinion, you find better profile overall, usually. Or at least you find people that have a different kind of mindset, more specifically for certain kind of roles. For example, for commercials, in my opinion, makes a lot of sense, mostly if you're selling B2B or if you're selling to corporates, to financial institutions, for example. Having someone with a network that is able to reach out to you without, a big alert or a big sign being present out there, it's kind of a very good value added. I was wondering about the commercial side. So you have been mentioning that you have been foot on the ground a lot. I was wondering, how do you actually manage your sales operation? You do have, like, for example, people needed to get a quota or something like that. How do you actually, push them to sale?
Yeah, so I think while we are, let's say, very human in our approach, we care a lot about our people. We are also very, very performance oriented. I think for everybody's sake, if we can't produce nice unit economics, there won't be a flat pay tomorrow. And therefore, we are incredibly
For
focused on that. I think we've developed amazing proxies for how to assess whether people are going to be successful long term based on how they perform in their first month. So we're not selling
mm,
enterprise SaaS solutions here, right? It's a relatively simple solution. The
simpler
quota,
solution, yeah.
the quota is that you have to bring 20 sales on a monthly basis. So that means if you are too far off that quota in your first month, the likelihood of you ever making it is just really, really
It's very
low.
low.
And then I think it's the responsible thing to do for the company, but also the person that just joined, right?
Mm.
We're not going to have you hanging around for 3 to 6 months for you to figure out that this was not the right job for you, neither personally or from the company's perspective. And therefore we cut ties relatively quickly if the person is not working, because we now have so much data that can tell us whether a person is going to work or not. And while it might sound brutal, for us, it's really about caring about the
Yeah.
business, but also caring about the individual employee, because we know that they will not be successful based on how they're performing in the beginning. And that also means that they will be most likely earning less money than they would like to. And therefore, it's better for both parties to part ways as early as we know that this is not going to work.
Yeah, I think it makes sense. I mean, you're wasting each other times in the end if you keep them around if they're not a good fit. So that makes a lot of sense in my opinion. And I will presume that turnaround is also pretty low under that perspective. So if you have a good kind of setup in terms of hiring, and if you have everything that you just described, I do expect that to be quite low, or at least above below average under that perspective.
Yeah, so like I haven't looked at averages. At least it's like we're doing much better than let's say we did at Verisure. So around 2/3 of the people are left after a year, which I think, if you compare it to industry standards, I think it's pretty good. Um,
Yeah, no, that's crazy interesting. So I was wondering also about the second point that you have been mentioning in the first place. So you said, my job is to actually make sure that I hire the right people, but I also need to make sure that I get the funding, to keep the company running. So I was wondering, how did you find the funding environment? So first of all, how was your last fundraise, for example? How hard it was to raise money right now?
yeah, so we've had 5 rounds in the last, call it 3.5 years. So
Mm,
obviously we've been like almost always fundraising. So we did the first round right out, like right after the, let's say, the big war in Ukraine. Ukraine broke out in 2022, and I think basically all capital markets seem to have dried up. But we managed still to raise a relatively nice seed round with a Danish VC called Seed Capital. And then we've gone on to raise additional rounds after that. And I think that the trickiest piece has been to convince people that even in a very red ocean, we can actually be different. We see the market as surprisingly fragmented on payments, and
mm,
probably then like 10 or 20x more fragmented on cash registers, like software tools, financial services, etc. We see ourselves, because of the distribution model that we are pursuing, we see ourselves as the play that can come and consolidate the market organically. Right? Because we're growing so fast. I think in Denmark, we're taking 10% of the market a year. In Italy,
wow,
we're taking 5% of the market in Italy a year.
that's huge.
Like, I think a lot of people would try and do all sorts of M&A plays, and all the VCs are asking us, like, would you like some money to go and buy stuff? And I think there's a lot of opportunity cost if you go that route. If you have a highway of just organically building a massive business, like we have one platform. If you take
Mm.
someone like Nexi, I don't know how many targets they've acquired, like probably 10, 20 targets, right? And that means they're running on all sorts of crazy systems to just keep the business running. Like we have one platform, we have one terminal. We've never changed the terminal type, right? And we could
Wow.
maybe have saved a bit of money. We could probably find other use cases for other types of terminals that would be a little bit cheaper for that specific use case. But we really believe in focus, right? So we have
Yeah.
one terminal type. We have one distribution model, right? We're not using a lot of partners. We're not trying to sell in retail as call it SumUp or some of the others. We're not using any third-party POS providers to go and sell the payment solution. We're not selling online. We're just generating leads online, even
Mhm.
though many would tell you it's a cheaper acquisition channel, etc. Right? Focus. Only field sales, right? Only one software platform. Very limited pieces of hardware. Like very limited number of parts.
You're basically removing distraction from that flow. So you just want to do what you're good at and you focus a lot on that.
Yeah, and I think a lot of people are underestimating the, let's say, the impact that complexity comes with. Like,
Mhm.
how fast can you move in your product and tech teams? Like, how big do they need to be? Like Square, they just cut 4,000 people, right? Probably because they've been too fat for too long, but also because maybe some of those people were unnecessary. Like our product and tech team is like 120 people. And I
Mhm.
think in, let's say 3 years from now, we will have exactly the same product as someone like Square. And they've spent like more than a decade and like they were 10,000 people.
Yeah, that's actually a very good point. And let's say this is something that happened very frequently, mostly recently, I would say. But, do you think that maybe it's a matter of, having too much capital under certain perspective, when you actually raise a huge round or things like that, you're kind of feel forced to enlarge the size and try to go after bigger numbers everywhere.
Yeah, that could of course be part of the reason. I think another part of the reason is that people, they will always try to persuade you to open an extra sales channel, right? Because marginally
Yeah,
it makes sense, but that's only if you don't factor in all of the opportunity cost that it comes with, right? And then shouldn't we move a little bit up the market? Like there are some big customers up here that we could try and go after. We could also maybe try and take some of the smaller ones, right? And we could try and do this industry and this industry. And then all of a sudden you're spread very, very thin, even
yeah.
though you might only be, let's say, gaining marginally, right? I can sell to exactly the same customer in field sales as I can do online, as I can do together with a partner, as I can do in retail, right? It is the same merchants. So we just decided, well, if we can't sell to you with field sales today, well, then we can probably
We'll
sell to you
never
in
go
field sales.
to you.
Yeah, or we'll just sell to you later, right? Either we won't be able to sell you if we did it online, or we will be able to sell you later, right? And then we'll just come and visit you again on a later point when we've gained more trust, when the brand is, let's say, more known, more reliable, when the product has X, Y, Z feature, etc., etc.
That's kind of a fair point. I mean, if you're not able to sell to someone in person, actually showing the solution and being there with them, it's very unlikely that you're going to sell them, using an AI bot or doing advertising online because it's kind of harder.
Yeah, and I think it's important to remember that there's still quite a lot of regulation in this industry, right? It's not like you can just sign up for a SaaS solution, right?
Mm,
There's specific documents you need to do your KYC, KYB, AML checks. And
yeah.
while of course you can do it, you need to really want to do it if you are to self-serve online, right? If you are running a limited company with a couple of different owners, let's say a board, some signatory rules, like
You
that
need a
can
lot of documents, a
you
lot
need
of
a
checks. It's
document there, and
kind
it
of crazy.
needs to be
Yeah.
correct, etc. Whereas we have the upside when we go there in person, we can just help them. Like
Yeah,
you
yeah,
can
yeah,
just
exactly.
look it up and tell them.
Yeah, and we constantly complain about how complex and how conversion killer is KYC. For example, with financial services in general. Yeah, let's take a look at KYB and have a very bad nightmare under that perspective because that is a huge pain. And how many customers do you have right now? How many SMEs are you serving at the moment?
So next week we'll cross 100,000 customers.
Wow, that's a huge number. All in Europe, right?
Only in Europe, yeah, and we expect to grow that number to around 200,000 this year.
Wow, to double that already. Wow, that's crazy.
Yeah, I think we entered the year around 70,000, so we expect to triple the business this year.
Wow, that's a huge growth. And wow, that's amazing to be honest. And in terms of volumes, how much are we talking?
Like processing volume or revenue,
Yeah,
or
processing, probably processing
so an average merchant with us is processing around 200,000 euros a
per
year.
year.
Yeah.
Okay.
So that's 20 billion euros in yearly processing volume. Then, of course, as we're growing like 10% on a monthly basis right now, there is, of course, customers that are still waiting to get online, etc. Right? So, but that's the math, and it's going incredibly fast. Also, of course, driven by the field sales model. The fact that you don't have to sit and wait for demand to happen is incredibly powerful. Of course, there's a million things you need to do right, and that's always what I try to, let's say, educate the different VCs
Yeah.
on that. Well, you can't just go and do it tomorrow. We made every thinkable mistake here. We still make mistakes every single day, and we are sometimes struggling to
Yeah.
get stellar unit economics right on this model. I think, however, that we are doing really, really good, really, really well. But the devil is really in the detail on every
Mhm.
single parameter in a field sales model.
Yeah, I think that. So I have a bunch of questions, to be honest, about international expansion right now, because we have been talking a lot about being present on the field, and you're doing this from Europe. That is kind of a good market under that perspective, because you have people that are relatively similar to each other. You have countries with, let's not call them same regulation, but very similar regulation under that perspective. So it's kind of
Yeah.
easy. But then the question is obvious. How are you going to internationalize that model? And I'm pretty sure that every VC out there actually asked the same question in the past.
Yeah. So I think one of the first selection criteria we look at right now, which we're constantly debating what should the selection criteria be, but is a selection criteria on GDP per capita, right?
Okay.
If the population is, let's say, too low on GDP per capita, it becomes a little bit more tricky to operate a field sales model, right? Because we need a certain average volume per merchant before we can really start to afford leveraging a field sales model. We also give away quite a lot of hardware without any security, et cetera, et cetera. So that puts some limitations to where we would potentially go even inside Europe. Like if you look to Poland, right, there's really, really exciting growth in Poland, but they are still in absolute numbers relatively low on GDP per capita if you compare them to Germany, UK, France, Italy, etc. So most likely the next market we're going to open is going to be outside of Europe. I don't think you need a lot of imagination to figure out where that
Yeah.
could potentially be. But let's say besides what might be obvious, there's still a few interesting markets outside of Europe. And I think if you then have the right partners on, call it the regulation part, it's not a lot different. There's of
Mm,
course the whole, let's say, visa thing that's tricky when you start going outside of
mm.
Europe, when you're expatriating people. There's a visa process that can be time consuming, but most of this is just time consuming. I think like a merchant in a great, like to a great extent, a pizza parlor in, call it Australia, is acting very much the same way as in Germany.
Mm.
Right? They're selling pizzas. They have a menu card. They have customers walking in. They need to be able to pay their bills.
Decent pay. Yeah, yeah, yeah.
There might be some tax regulation that you need to integrate to, but overall, they are similar businesses.
Yeah, I do agree from a certain perspective. I think that the fair point here is that they do need to accept payment in a way or another. That's totally fair and absolutely right. But then when I'm thinking about, for example, let's suppose the US, okay, that is kind of the obvious choice by everyone doing payments right now. You do have a couple of issues there. Like, for example, let's suppose that you want a payment license in the US, you're going to end up doing 51 different payment licenses process. And that's kind of a very huge pain point. And on the other side, you will need to do settlement in a way or another because you are going to accept USD, and maybe some of your customers will want to sell there, or maybe they will need to exchange them to euro in a way or another. So there are certain kind of things that are going to be tricky under that perspective.
Yeah, so I think from a regulation point of view, we're leveraging partners to take care of that. We're not a regulated entity today, right? So
Okay.
we're operating without a license on
Hmm.
purpose because it allows us to move much, much faster.
Yeah.
As you say, right? If we had to wait for a license in Australia, in Canada, in the US, we would have to know which market to go to like 1, 2 years in advance. But if you're
Yeah.
leveraging a partner that already have that in place,
That's kind of easier. Yeah.
you might be giving up a few basis points, but
Hmm.
acquiring has also become a commodity these days, I would say.
Yeah.
Like we're not paying a lot of money for our acquiring services.
Mm.
Also we shouldn't pay a lot of money because we have incredibly high quality on our transactions. So that means they become a currency in their own. Overall, we don't see any immediate or let's say future need to go and take a license. Like we're not
That makes a
held
lot of
back.
sense in my opinion.
Yeah. So
Yeah,
so that's
if you do have the right partner, like you can expand rather quickly than going direct. I totally agree under that perspective. So you can actually solve the license problem. Mm, I think it's going to be very interesting to see you applying the field model in countries like the US or Australia, for example, that are very different from the kind of things that we have, for example, in Europe right now. And have you thought about the internationalization of the model itself, the field model? Because that is going to be very interesting and impacting a lot of your day to day operation because you will need to hire people that are not just a good fit for your company, but also a good fit for that specific market under that perspective.
Yeah, so I think our perspective on that is that, well, yes, we do expatriate call 10 people every time we open a new market that knows how we want to run things at FlatPay. But all the other people that we go and hire from there
Hmm.
is people with local understanding of the market, right? So if you take
Mm,
Italy as a market, like we expatriated quite a lot of people. There's zero of those people left. Now the Italian team is run 100% by Italians.
cool. That's very nice.
The same in Finland, right? We still have a couple of expats back in Germany. Soon we won't most likely have a lot of expats in France as well. And then we try to make sure that the person that we promote to being, let's say, the
The
managing
country
director,
manager. Yeah.
yeah, that they were, let's say, properly trained by the previous managing director that
Mhm.
had been with the company for longer, right? Every time we talk, we try to make sure that they live the values the same way as we want them to. We monitor it, we talk a lot about it, and I think so far we've found that formula to be working. Actually, also with ex consultants, right? Maybe with a bit
Mm,
of
yep.
corporate experience as well. But then you just know that the bandwidth, like the processor up top, is just really good. And if you then find also, let's say, people that are caring, people that are friendly and nice, then we found that to being, like I said, to being a winning formula.
A good fit, I would say. I was wondering, there's a lot of talks recently about cross borders and accepting payments in different countries, as you are doing, of course. And the obvious, let's say, direction or idea that comes in mind of payment people when talking about this is obviously stable coins recently, mostly when coming to cross borders. Probably this is not exactly the right, let's say, trend for you at the moment, given all the kind of focus that you have on field operations. But I was wondering if you are actually taking a look at stable coins in terms of payments, maybe for the future.
Yeah, so we like first of all, we don't do almost any cross-border payments. Yes, the SMBs very rarely work across borders.
Okay.
I don't think I even have a single merchant that is present in more than one country.
Hmm.
So I think that that makes our lives a little bit easier.
Yeah.
We're not working a lot on like FX, etc. But I think more importantly, we're not hearing any demand
Hmm.
from any merchant wanting to settle in stablecoins. While that might make sense if you are a big enterprise and there is large volumes and let's say speed and FX cost to save, I think for the average SMB,
Mhm.
it's 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 not at least
It's
right
not
now
there.
relevant. Well, they care much more about lots of other stuff. Like, do you pick up the phone? Do you settle my money when we agreed? How's the technical solution? How stable is it? What are the new features coming out to support my business? Because we basically become the backbone of their business, right? So they're relying on us on developing new features and functionalities. Whereas if you are a big enterprise, you have that power in your own hand. And then yes, you might be integrating to a payment provider, I don't know, a stablecoin provider, etc. But most of what you do is in your own hands. Whereas if you're an SMB, you're relying on somebody else to take that responsibility and make sure that you push all the right features and functionalities that you would potentially be able to use.
Yeah. makes a lot of sense overall, to be honest, because you need to be focused on the final customers in the end. So if they don't need it, makes no sense for you to go in that direction. But then my obvious follow-up question would be the other major trend recently, not just in payment, but overall, and you've been mentioning that a couple of times, is obviously AI. I was wondering, how do you match, being so near to the final customer and so near to their needs with the current, trends that we have, for example, with automation, with AI and using AI in day-to-day operations. So are you using that, or you prefer to, like, let's say, stay a little bit away from it to be more present, more physically present to the customer?
So I think it's a bit of a balance, and I think it depends
Mm,
on where you look in the organization. So if you look to how we operate field sales, like many people will probably call it quite analog, which is fine by us, but there we're not leveraging, let's say, in the sales funnel itself, a lot of AI. Where we're trying to leverage AI is actually understanding the customers, on developing new stuff in technical and product teams. So, for example, we make sure that we collect all the product inputs from every single customer call,
mhm,
and let's say make that into useful research, right? That's the
mm,
best research we have. If people call in saying like, I'm missing this feature, or where can I find this? And if it's then not there, then we can start to qualify and quantify what our merchants actually are asking for. Of course, we also do lots of interviews with merchants, with our people. You can also leverage AI to do that. There's also things you can do on customer support. If your AI is good enough and you let it integrate deep enough, there are requests where you prefer speed over human
mm.
touch, right? If your terminal is not working and, I don't know, it basically just needs a restart.
Yeah.
It's
So
kind of stupid that you have to wait. Like I think we answered like
for
90%.
someone to come there, yeah, it makes
Yeah, but
sense.
90% of our calls are answered within 30 seconds. But even like, why should I wait 30 seconds if we know exactly what your
Mhm.
problem is, right?
Yeah.
We know everything about your terminal, you're calling in. It could be relatively simple getting someone on the phone immediately, just restart that terminal, and then it might be going. It might be the fact that you haven't turned it off for some while and it need an update. Could be all sorts of random stuff. So we're testing that out to figure out how far can we come without destroying the customer experience. But I think where we are working the most with this is in the, let's say, in the technical teams and in the product teams. I think that's where we're seeing the biggest impact right now, where we can simply uh, write code a lot faster. We can like qualify the code a lot faster. We can build, call it product in adjacent industries a lot faster.
Mm.
Because typically in our industry, we're not developing something entirely new that a merchant have never seen, right?
Yeah.
Well, like a table booking platform, well, that's a table booking platform. Well, I can go and invent some nice and cool features, but the
But it's
core and
the
the
same
heart of that,
in the end.
yeah. And there's so many competitors out there that we can take inspiration from to figure out like what is the right feature set for our merchants. Like we can just pick and choose. And then we
Yeah.
can say, okay, these are the functionalities that we think our merchants will need. Please help us fix it, right?
Mm.
Like even 6 months ago, that was almost impossible to do at scale and to do fast. And I think we're really seeing the benefit of that. For us, it's probably as much about saying no still. Like we are no sayers. We
Mm.
say no a lot because we don't want to kill the focus of the business. So I've had lots of VCs tell me, well, product ambition is too slow. Like
Mm.
when we spoke to you 6 months ago, it was roughly the same, et cetera, et cetera. But we want to go and develop products that are, let's say, good enough so that our merchants, they can absorb them, but also in a pace where we can actually go and sell it and get meaningful adoption. But I
Mm.
don't want to have 10 different products where 5 of them are being used by 2% of my portfolio. Then I would rather not have them. And then I would much rather monetize the other 5 products, make sure that we develop the right feature sets for those products so that they go and add value for the merchants. Right? And that's the balance that we're trying to strike. Now that you can build incredibly fast, how do you make sure that you still only build useful stuff?
Yeah, first of all, that is not easy at all. I mean, only saying no, it's a challenge by itself. It's kind of very hard to say no to investors. It's kind of very hard to say no to customers that want to buy a new product and everything. So that is kind of very, very hard to do. And at the same time, I mean, you're basically doubling, if not tripling, the kind of customers that you have this year. So that is not slow, I would say. So it's kind of going in the right direction, I would say. But makes a lot of sense. I mean, focusing on what is important for them, and you cannot make, 100% of the customers out there happy. So you need to focus on what you're good at in the end.
Yeah, exactly. We want to avoid that long tail of features that, let's say, allows us to get a little bit larger
Yeah.
pie, a slice of the pie, and then focus on what really matters for the merchants that we are serving, right? Of course, that's a tricky balance always to figure out exactly
Yeah.
how you should prioritize that. But I feel like we have a strategy that's working fairly well in that sense. Like we don't have any revenue concentration, right? The biggest merchant in our business is like 0.001% of the revenue, most likely, or 0.01. So
That is
it's
a
not,
very good point. I mean, it's a very
yeah,
positive thing.
we never get pressured to do any development work. If we don't think that it will add value for the majority of the portfolio, we can just say no, and then, well, you will have to find another solution. As long as
Mhm.
it's not related to us over-promising, and it's related to you, let's say, maybe on the back of signing, figuring out you had another need as well that you didn't mention, then we don't go and try and fix that unless we think that it's beneficial for the majority of the merchants, right? I really don't believe in trying to serve the ones that are screaming the loudest. So we try to stay clear of that.
Yeah, that's let's say that's a very good quote, to be honest. Usually it's very, very easy to go after the one that are screaming the loudest, to be honest, because it's, they're the one making more noise, and noise is obviously bad in the end. I was wondering, do you actually have a North Star under that perspective? Do you have a vision in mind, or a long-term target that you want to achieve? I was wondering if it could be like number of merchants or covering all SMEs in Europe, something like that.
Yeah, so we hope to leave 29 with 1 million merchants. That's kind of
Wow.
what we are aiming for. We want to be their, let's say, preferred partner across payments, financial services, and, let's say, software components.
Mhm.
Because if you own their, what you would call a POS or a cash register, there's a lot of benefits to you also owning a lot of the other software components for that merchant, right? You only have to create your employees one place. And then if you're also utilizing a workforce management system delivered by us, there's a lot of data that can flow both ways. How are they performing? When did they punch in? Uh,
Yeah.
how are they doing on tips? What's their average basket size? I don't know. How does their schedule look? Everything. There's a lot of synergies from such a product. The same on like online ordering. If you have your product catalog, your categories, your modifiers, everything, you can basically get them online ordering with like one click. Um, so I think that's the thing that we're looking a lot at right now. How can we help these merchants get served on other verticals of products as well, given that there's quite a lot of the data that we already own and puts us in a favorable position to help serve their needs in that sense also.
That's very, very interesting. Last question from my side. This is something that I usually ask to all entrepreneurs that come to the show. What is an advice that you can give to someone else that is starting a fintech company right now in this present moment?
Yeah, so I think our own story is a good example that you don't need to go and reinvent
Mhm.
something. Like we've had the luxury of not having to find product market fit almost. It was
That's
already
kind of a luxury. Yeah.
Yeah, it was already there. We just had to do better than competitors. And then we decided then to start in a space that was filled with incumbents and probably companies moving a little bit slower than what merchants would like them to do. You don't need, in my opinion, a fantastic idea, something groundbreaking, something very new to build a nice business and a large business. And then I think that probably the second advice is that if you have had a good corporate career, you can still go and build a startup. Like you learn stuff in corporate life that will help you build faster. And I think we are good examples of that. Like I said, we've spent probably the first 10 years of our career in corporate life. We've also built other startups in the past and also after FlatPay, but still we had a good run in corporate life
Mhm.
and decided to quit that life to become, let's say, true entrepreneurs, to feel, let's say, happy again, like running your own thing, or even working at a startup or a scale, it's just very different from working at a
Yeah.
corporate. And of course, you need to like it, but if you like it, you will like it, in my opinion, a lot better than working at a big corporate.
Yeah. To be honest, I totally agree with the second one. I think that there are a lot of things that you can learn in a large company, in a large corporate, that you can apply to actually build your own business. Maybe not all of them. I wouldn't take all of that part, but overall, a very good experience. But yeah, totally agree. Sander, it was a pleasure speaking with you today. Thank you very much for joining. And yeah, I wish you all the best with FlatPay. And I really wish you to get to 200,000 customers by the end of this year. I'm
Thank you
pretty
so
sure you're
much.
going to do that.
Thank you so much. Appreciate it. It's good seeing you.
Thank you. Thank you.
Thank you.